Let's be real. Have you ever felt like the stock market is some kind of exclusive club? With its own secret language that you're just not supposed to understand? Well, you are definitely not alone. So today we're going to demystify the whole thing and give you the keys to this supposedly complex world.
It really is like listening to a secret code, isn't it? All the jargon, the crazy charts, the never-ending stream of numbers, it can feel like it's designed to be intimidating. But what if I told you it's nowhere near as complicated as it looks?
That's what we're going to do. We're going to translate that language for you piece by piece. Think of this as your personal map for your own financial journey. And by the end, you'll have the tools you need to navigate the market with a whole lot more confidence.
So where do we even begin? Well, the very first step on any journey is you got to get your keys, right? And in the stock market, that means getting the right account set up so you can actually get started.
Okay, you're going to need something called a 3-in-1 account. Sounds fancy, but it's super simple. Think of it like this. Your savings account is your wallet. It's where you keep your cash. Your trading account is like your shopping cart. It's what you use to actually buy and sell shares. And the Demat account, that's your digital vault, a super secure spot where you store the shares once you own them. Simple as that.
All right, so you're all set up and ready to roll. You've got the accounts, you've got the keys. But where do you actually go to buy these shares? Turns out there are two main marketplaces where everything happens.
First, you've got the primary market. This is where companies sell their shares for the very first time directly to investors through what's called an IPO. Then there's the big one, the secondary market. This is the one you hear about on the news every single day. This is where investors, people like you and me, trade those shares back and forth with each other.
Now that you know where the action is, it's time to actually make your first move. Let's walk through how you place an order and buy your first piece of a company. This is where it gets exciting.
Honestly, just think of it like online shopping. A limit order is for the bargain hunter in you. You're basically telling your broker, hey, I'm only willing to buy this stock if it hits this specific price. A market order, on the other hand, is like hitting the buy it now button. You just want the stock right away at whatever the current price is. One's about getting the price you want, the other is all about speed.
Now, this next one is an absolutely crucial tool for playing defense. It's called a stop-loss order, and it's basically an ejector seat for your investment. If a stock you own starts to fall, this order automatically sells it for you at a price you've already decided on, protecting you from potentially much bigger losses. It's your safety net.
And once your trade is complete, you'll get something called a contract note from your broker. Now, this is important. This is way more than just a receipt. It's your official proof of ownership. It's the document that says, yep, you own this piece of this company, and it lays out all the details of the trade.
And just like that, congratulations, you're officially a shareholder. You've joined the club. You own a tiny slice of a business. But what does that actually mean? What happens now? Let's take a look.
See, as a shareholder, you're not just a spectator anymore. You're a part owner. And that comes with some pretty cool perks. You might get dividends, which is literally the company sharing its profits directly with you. You could get bonus shares, yep, free shares, just as a thank you for being an owner. Or you might see a share split, where the company increases the number of shares you own, which usually makes them more affordable for other people to buy too.
Okay, so you know the mechanics of how to invest. Now it's time to finally learn the language of the market. Understanding just a few of these key terms will help you follow what's going on and, make better decisions.
You're going to hear this one all the time. Bullish. It just means someone is feeling optimistic. They believe the market or a specific stock is going to go up. Think of a bull charging forward, horns pointing up. That's the feeling. That's a bullish market.
And of course, the exact opposite of bullish is bearish. This means someone is pessimistic. They think the market is headed for a downturn. Think of a bear swiping its paw down or slowing down to hibernate. That's the vibe of a bearish market.
So how can you tell if it's a bull or a bear kind of day? Well, you check the market indices. Think of them like a weather report for the stock market. They give you the overall mood in a single glance. Here, the two big ones you'll always hear about are the Sensex and the Nifty. When the news says the market is up, they usually mean these indices are climbing.
Okay, what about figuring out the size of a single company? You'll hear the term market capitalization, or just market cap. It sounds technical, but it's really just a fancy way of saying how much is this company worth on the stock market. You just multiply the total number of shares by the price of one share. That's it. Bigger market cap, bigger company.
And to give you a real sense of scale here, we are talking about massive numbers. Any company with a market cap over 10,000 crores is known as a large cap.
These are the giants, the household names you already know, like a TCS or a Reliance. They're the ones that really move the market.
And there you have it. The stock market isn't some secret club with a secret language after all. You've got the keys, you have a map, and now you know some of the lingo. So the only question left is, where's your journey going to take you?